The Real Estate Hour, the longest-running real estate talk show in the North Bay. Heard every Sunday morning right here on KSRO. Hosted by Allison Norman and Stephanie Norman, local realtors with local real estate experience. The Norman Home Team, a mother-daughter real estate team with Keller Williams Realty Wine Country. And now, here are Allison and Stephanie.
Good morning.
Gosh, the rain, the thunder, the...
Yuck.
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 We don't do well in this
No,
kind
we
of...
don't like it. I just want to be in bed and all cozy. I don't want to go out on the roads.
Not a fan. I know, it's really wet out there. Be careful out there, everyone.
Yes.
We got a ton of rain overnight.
Oh, yeah, definitely.
And that giant thunder boom.
Oh, my gosh,
Was
yeah.
that like half an hour ago or so?
I thought it was an airplane. we live right near the airport,
yeah,
so we hear a lot of loud planes.
We do that, hear that. But that one, it just kept going. It was a
That's
really
true,
long thunder burst or whatever it's called.
Yeah.
Anyway, good morning.
Good morning.
Welcome.
So, welcome to the Real Estate Hour. We have, we're going to be talking about market update. We have George Adair calling in with
Cross Country Mortgage. And so we're going to talk to him not just about, how do you get a loan? What do you do? Which is what a lot of times we have that conversation, which is a very important conversation. Mm-hmm. But I wanted to talk when we mentioned last week, kind of what's happening and what's making the rates so volatile. They're going up, they're going down. They were down and it looked like we were getting a really good start into the spring market, and then they went up. And of course, global things often affect rates. They're kind of reacting differently, though, than we usually when there's global unrest. The rates actually come down to help stabilize things, but we've got all the inflation. We've got other things happening that are, I think, working against us. So George is a much better person to explain all of that than us, in my opinion. I don't know.
Yes, no, I agree. I can't explain any of it.
I mean, we understand it, but it's, that's what the lenders do. The loan officers, the loan originators, all, what they do is really closely follow what's happening with the rates. They can help you understand, is now a good time? And if you're in escrow, you can lock a rate, but it's really kind of a strategic, when do we lock the rate? What are the rates doing? What are you hearing from your people? What's happening with the rates and coming down the line. So we're going to talk about that and why rates move the way they do and why mortgage rates are different than other, commercial, like credit cards and car loans and even the HELOC and all of that. So there's different factors and different things in play that make those change. Yeah. So when you hear on the news the rates, what rates are they actually talking about?
Yeah,
so George will explain all of that to us.
Yes,
stay tuned for that at 9:30. And then we'll have our market update. And then I wanted to talk a little bit about, there was an article I shared on, I think it was on the real estate. We have our Norman Home Team Facebook page, and then we have our real estate. We try and post on both of those. Mm-hmm. But there was an article, it was realtor.com. Love them or hate them. They have some good information. But there was an article, which is kind of what we talk about all the time, is markets are hyper local. Mm-hmm. And, the markets are reacting differently in different parts of the country. So when you're hearing it on the news, really pay attention to where they're talking about. Is this a national?
Definitely.
Even like right now when we're talking about gas prices, the average gas price is like $4 a gallon. Well, that doesn't apply to California,
Definitely not. We're like, oh, yay, $4.
I know. Woo-hoo. Yeah. In other parts, they're all $4.
Yeah.
But same goes for housing, cost of housing, even rent, cost of rent.
It's different everywhere.
It's all where you live, and it's even as finite as neighborhoods,
Yeah, so that's why we like to give you guys the market update for Sonoma County, and we do single family residential and for just Sonoma County from last week to this week, and then we have the single-family residential condos, multi-units.
Yeah, for
homes,
a
land,
broad look at Sonoma
and
County,
it's all
right?
Sonoma County, but we can also do a broad look at like your neighborhood or like a specific area you're looking into.
A not so broad look.
Yes, exactly.
We can narrow it
pinpoint
down.
Exactly where you want to know what the market's
Yeah,
doing
so
in
it's
that
really
area.
important. You know, I like we always say, it's important to know what's happening nationally and what they're saying on the news, you know, about the market and what's happening. But it's so different from area to area, and not even just county, but just neighborhood to neighborhood. Things are acting, and price point, you know, and that's another big thing that we'll talk about also is you know, the higher end homes. And then the lower end, and what's selling right now really is the lower end of the market. Is what we're seeing sell more. And I think Stephanie's weekly numbers are going to reflect that as well.
I think so too.
So anyway, well, before we get into that, I wanted to mention we've had them on previously, the MERP, the Medical Equipment Recycling Program.
Yeah.
Stephanie and I both are involved with the senior community. We work with a lot of families and seniors or family has lost a parent, and we're working with them through that. But because of that work that we do, we belong to a group called Section on Aging, which is a group of like-minded people that do the same, whether they're realtors, there's some reverse mortgage lenders, there's senior care facility, there's skilled nursing, there's at-home care, there's a whole bunch of different people that are in this group, somehow working, you know, in some capacity with seniors. So out of this group came an organization called MERP, which is an arm of Section on Aging, but it's Medical Equipment Recycling Program. They are a 501c3 as of a couple of years ago. They take donated medical equipment. And right now, they're expanding into multiple locations. They really wanted to get the word out that they have free medical equipment for anybody. No, it doesn't matter if you can afford it or can't afford it. They don't care. They, you know, rather than buying it new, let's keep this equipment out of the landfill, which is often what happens when somebody passes away or they no longer need it. They'll just send it to the dumps. You know, it's like, wait, there's somebody that could use that.
And it's really convenient that that's there, because I remember my brother hurt his leg and he needed crutches, and I thought we could just get them like at Walgreens or something. Buy some crutches, and they were nowhere to be found. So it's nice to know that this program is available.
Yeah.
Even if you just need like for a limited amount of time, and then you just donate them back.
Yeah, take it back. And then they have a couple of people, volunteers there that actually can fix if it has a little something, you know, that needs to be fixed. So they take wheelchairs, walkers, commodes. They take they even take like package of adult diapers. They take all types of medical equipment, even with some Hoyer lift, which is something that helps move somebody around. Hospital beds, the stair ramp, you know, the stair lift things, all kinds of things that they get donated. So before you go buy something, go look at go look on their website or go to one of their recycling programs. They have a lot of stuff right now. So the word has gotten out that they take this stuff, I think.
Yeah.
The word hasn't gotten out as much that they're available to give it away for free. I mean, if you want to give a donation, you're welcome to. If you want to volunteer, they always love volunteers. So if you're looking for something to do once a week that you can commit to, maybe being a little more consistent than just every once in a while, but they would love volunteers. They have locations now, the original in Santa Rosa, but they also, which is on Standish Ave, 3650 Standish Ave. They are open Mondays and Wednesdays only, 11 a.m. to 1 p.m. And then Cloverdale, they have a new location in Cloverdale, open Friday, 11 a.m. to 3 p.m., and that's at Treadway Drive in Cloverdale. They're in Guerneville now, which is a huge benefit for the people out in at the Russian River area in Guerneville, that they don't have to come all the way into town.
Definitely.
Same with Cloverdale, because that's a big haul to get up there too. So if you're in Cloverdale, you don't have to come all the way down to Santa Rosa. Yeah. But Guerneville, they're open limited hours Thursdays, 10 a.m. to 12 p.m. Russian River Senior Center. They also are out at Oakmont now. So, and I believe it's at the Oakmont really Farmers Market. They have a place where you can donate, and they'll also give out. This is free medical equipment, you guys, if you need it. So,
and if you don't need it, spread the word.
Yeah, spread the word. Tell
everybody.
And then we also do. I'm part of a group that will do pickups. So if somebody can't get if you can't get your items to a MERP location to donate them, we'll come pick them up. So you just call or go online, and it's MERP. It's Sonoma. I believe it's Sonoma MERP. Just search Sonoma, and it's MERP, M-E-R-P, and it's an acronym for Medical Equipment Recycling Program. I thought I printed up that. If you have questions, you can call 707-353-3416. And then, I think that's right. That was at the, and then, just search Sonoma MERP. I believe it's SonomaMERP.org, but I could be wrong, and I'll look it up and let you know if I'm wrong. And Joe will post that on the on the KSRO.com podcast page. And then we will also post it on our radio show Facebook page, which is the Real Estate Hour with Allison and Stephanie Norman.
We're also on YouTube now,
on Facebook.
And we are working on getting ourselves on the Spotify.
Yes, we're up there, but that's not organized, so we'll give you that information later. But anyway, so if you need some medical equipment, they have an abundance right now, and would love people to reach out. Take advantage of that rather than going and buying something new. It's there, it's available. A lot of times it's something you only need for a little bit.
Definitely.
A lot of this equipment is like new. I picked up out in Oakmont a few months ago 3 wheelchairs because they kept buying them and it wasn't really the right fit.
Oh, yeah.
And they had through one that wasn't even used at all. And instead of dealing with returning it and, all of that, they just donated it, which was very nice. And somebody, as soon as I dropped it off in Santa Rosa, it was the day they were open, there were people all over it going, oh my gosh, this is perfect. So it's good that there are people utilizing this, but we need more people to know about it. So MERP, M-E-R-P, Medical Equipment Recycling Program in Sonoma County.
And it is .com.
Oh, it's .com. Is it Sonoma MERP?
Yeah, but it changes to something else, but Sonoma MERP works.
Yeah, SonomaMERP.com. Yeah. But it is a 501c3. They actually got that status a couple of years ago. So, alrighty, we're going to take a quick break. We come back, we will talk, let's go talk about the numbers and all of that.
Yeah, perfect. Let's do it.
And we'll be right back. I'm Allison Norman.
I'm Stephanie Norman.
We're the Norman Home Team. You're listening to the Real Estate Hour. We'll be right back. Good morning. Good morning. It's the rain. Blame it on the rain.
Yes.
Things are a little chaotic. Also, we got a new kitten.
Oh, we did.
We got a new kitten. We have a very needy little girl.
Oh, she's just a baby.
Oh, my goodness. She's a handful. But she's a little tiny baby we got at Clear Lake Animal Shelter, which is a very nice place up in Lake County. Boy, if you're looking for a pet, a new pet, consider Lake County because they have a huge problem with animals just being dumped. In fact, when we were went to go pick her up, there was somebody that was coming to get one of the dogs. They had found 2 puppies. They literally saw the person dump them. I didn't realize at the time. They came back by and they were still sitting there. So they took them in. Ended up adopting one of them, but there's a huge problem there. So
even
but anyway,
the kitty that we got was actually part of that, where they were dumped, and it's just,
it was a kitty that was dumped. I was looking for here. So we have a new baby in our house.
Yes,
she's very cute. She doesn't have a name yet, but. Actually, she's had a couple. No, that doesn't fit. Okay, so before we do the numbers, I was mentioning there was an article that I shared on our Norman Home Team Facebook page. I think it may also be on the Real Estate Hour with Allison Norman Facebook page, but it was really struck exactly what we talk about, which is the national housing market is really sending mixed signals. So when you hear what's happening on the national news, just keep in mind that it's not necessarily
like we have mentioned,
your town.
It's not specific to your area. And so if they're talking on the news, which we hear all the time, and like we had mentioned in the beginning of the show, that's not all. It doesn't apply to your area specifically. Yeah,
and really right now we're seeing very mixed signals from even our local market, because the higher end of the market is really sitting a lot longer on the market than the lower end.
Yeah.
But this was from Realtor.com. It says the national housing market is sending mixed signals with home sales stuck at historic lows for 3 years. Home sales, not home prices. Mm-hmm. Home sales and this is nationally, stuck at historical lows for 3 years while prices remain near record high. So, but beneath the surface, cities have never been more divided. Across the top 50 metros, 26% are in a seller's market, a 16% in a buyer's market, and 46 are balanced but loosening, reflecting a level of fragmentation not seen since at least 2018. And I will say we're more in that. What was it, 26%, that we're still in a seller's market. We did a presentation at a group that we sponsored. Sorry, I'm getting the words out. And we were talking and pulled up a list and showed it's been a long time since we have not been in a seller's market, and we're still, some segments of the market are really kind of teetering on the edge of being in a buyer's market. Picking up, though. But yeah, we're still in it. We're until we have 5 to 6 months inventory, and we're still at like 2.5 on average. The lower end, I'd say it's probably more like a month's worth of inventory, and on the higher end, it's probably up there towards 5 months, depending. And so we're seeing that higher end pick up a little bit. But yeah, so it's all over the place. So you need to know, you can pay attention to what's happening nationally, statewide, Sonoma County, or whatever county you're in, but really then talk to us or talk to another realtor that that follows the numbers, and really get a better look at what's happening in your specific part of the segment of the market.
And we are more than happy to help you with that.
Yeah, we do that all the time.
Yes,
so
we
let
do.
us send.
No
we can put you exactly. We can put you on a weekly where we send out weekly saying, hey, here's what's happening in your neighborhood today, and it's going to be specific to your neighborhood, not not here's what's happening in California, or even Sonoma County. Yeah. So utilize us for that. We're happy to do that. You can always reach out 707-799-3617 or nodumbquestion@gmail.com. Is a good way to reach us as well. Yeah. Okay, so let's dive into the numbers so we have time to get them out before we have George Adair calling in to really talk about, we talk all about the real estate side of the numbers, which is sales and prices, days on the market, all of that. The lenders, including George, who's very good at what he does, really follows what's happening in the market and those numbers. So that side of the market, which is a huge piece of you being able to afford a home, is really understanding those numbers. So we're going to he's calling in at 9:30, George Adair, Cross Country Mortgage. So stay tuned for that. And let's get these numbers out so you can see what's happening all across Sonoma County right now. We've got single family homes currently active on the market. We're up to 735. That number is up. It was actually 665 last week. So it is inching its way up. We have 276 in escrow. These are single family homes. That escrow number is actually down a little bit right now, but we've had some weather, and that usually means people don't really want to go out. We've also had things happening in the world, and interest rates inched up a little. So keeping an eye on that. The median price of what's on the market right now is $1,999,000. So basically $2 million. Those are houses that are sitting on the market ready for you to make an offer. That's the middle of the market. And then in escrow, that median is at $890,000. That's where we see the huge difference. What's active on the market, the higher priced homes taking a little bit longer to sell, and what's going into escrow is that lower end of the market. On average. So condos, there's 125 active condos on the market with 56 in escrow. That number is pretty similar to last week. Mobile homes are 83 currently active on the market with 42 in escrow. That's actually almost exactly the same as last week. Multi-units, 2 to 4 units, we have 98 active on the market, and that was last week. We have multi-unit, 2 to 4 units. We have 99 active on the market with 13 in escrow. Very similar. There's a little bit more in escrow than there was last week. And then land, we have 295, which is up just a few, still under that 300 mark, which we like to see, with 44 in escrow, which is actually up a little from last week. Nice. That's a look at what the market looks like, kind of a look at the whole, what's happening, what's active on the market, what's going into escrow. Stephanie has what happened just in this last week, so we can see what's happening week to week in this single family
family residential for Sonoma County last Sunday to this Sunday. So for new listings, we have 171 with a median list price of $985,000. which is a little bit, it's up from last week. Last week it was 122 new listings. Now we're at 171 back on market.
Up quite a bit.
Yeah, and back on market we have 28. So pretty much everything has gone up from last week. So 28 price reduction, 65, which actually is a big number from last week. I think it was really in the 30s, I believe.
Yeah, and when we track price reductions to see how we're all doing at us being the collective, really sellers are doing at grasping what's actually happening in the market. If we're seeing a lot of price reductions, it's because homes are coming on the market too high. Yeah,
definitely. So price reductions last week were at 39. So yeah, that is a big jump.
Yeah.
To 65. And so in escrow we have 79, pending 58, sold 101 with a median sold price of 840,000 and 43 with an average days on the market of 43 days.
And that came down too.
It did come down.
You know what I see in those?
50, so it's inching down.
What I see just at a glance at those is the higher number of listings that came on the market, but we had more price reductions. Actually, not the higher number of listings, but just the more price reductions and then the shorter days on the market. Yeah. I think what's selling is that lower end. Like we said, and we probably had more lower end homes come on the market than we had higher priced homes, and then we had more going. I don't know. Anyway, made sense in my head So that's so that you don't have to write all these numbers down. We always post them. Stephanie's really good about getting up usually the same day, getting them up onto our Facebook page, The Real Estate Hour with Allison and Stephanie Norman, and then we spread them out across the board across our other pages, which is Norman Home Team the Norman Home Team. It's just the Norman Home Team, and then. Or is it Norman Home Team?
It might be Norman
with
Home
Allison,
Team with Allison
and Stephanie Norman, and then our individual Facebook pages too. So we spread those numbers out everywhere, so that you don't have to write them down. But it really is a good idea to follow along with them because the numbers are telling. You know, that's why we follow them. It tells you what's going on in the market.
Definitely.
Anyway, so that's there was some little tidbit that popped in my head I was going to mention, and I left my head just as fast as it popped in. But anyway, we're excited to have George Adair calling in. He'll be on the phone just shortly after right after our break. But we're going to take a break now. We come back, we're going to talk all about mortgage rates. What in the world is happening with mortgage rates? So I'm Allison Norman.
I'm Stephanie Norman.
The Norman Home Team. You're listening to The Real Estate Hour. We'll be right back with George Adair. Good morning. We're back.
Good morning. We have George Adair on the line.
Good morning. Welcome, George. So George Adair, a longtime loan guy here in Sonoma County, and currently mortgage advisor, branch manager, Cross Country Mortgage. Welcome, George Adair.
Hello, ladies. Good morning, and thank you for having me on today.
Absolutely. Thanks for always being available when we have any mortgage and loan and questions.
Yes, we appreciate it so much.
Like we say, you all can explain it so much better than we can. We can tell you all about buying a house, what the numbers look like there, but when it comes to what in the world is happening with mortgage rates right now, I know you follow it closely, and really appreciate you calling in so we could kind of pick your brain about that. But why don't you first, I gave you a little miniature introduction, but tell us a little bit more about who you are and what you do here in Sonoma County.
Yes. Thanks again for having me, ladies. I love your show. Listeners are lucky to have you, giving them all the most current and updated info on what's happening in the real estate marketplace. And, I've been doing this for 23 years, helping families and investors buy and finance their real estate purchases. And I'll tell you one thing. In those 23 years, I've seen a lot of things happen. I know you have too, Allison.
Yes, I'm 20 years, so you've seen a little bit more than me. But yes, we were there together when all the things.
All the things, and I tell people, you know what? That band of interest rate volatility is always going to happen. There's always going to be these peaks and these valleys, and buy when you can afford it, and then finance it later if you need to.
Yeah, and that's always the best thing is, it of course it's, it does very much affect some people's ability to afford a house. But at the same time, don't focus so hard on what the current mortgage rate is. Let's see if we can figure out how to get you in at a price that's comfortable for you. And I know you're very good at doing that. So I guess let's just kind of dive into what the main thing. I mean, there's a lot of things that we'd love to talk to you about. The main thing I really want to your help in explaining to people is what actually moves the mortgage rates. We hear on the news they talk about mortgage rates, and then sometimes they just talk about the rates, and then they'll say the Feds, lowered the rates to 3% or something, and everyone's, oh my gosh, the mortgage rates are 3%. Well, no, that's not what that means. So what drives the mortgage rates up and down, and how is that different than what's driving the consumer, like credit cards, car loans? I think even HELOCs fall under that, the line of credit. Am I right in that they fall under more of the consumer rates, or am I wrong?
Okay. Yeah. So basically, mortgage rates are driven by the demand for bonds, and they're called MBS, or mortgage-backed securities. Now, a lot of people think, the Fed is going to drop rates this quarter, another 0.25%, or maybe later this year, another 0.5%. Mm-hmm. But, eventually that does trickle its way into the cost of funds for banks. But in the more immediate time when that happens, it actually doesn't really have much impact on first mortgage loans. The ones that you use to get a 30-year fixed mortgage, to buy a house, or to refinance, those are not really impacted by Fed movement. The HELOCs, which is really an acronym for home equity line of credit, is driven by what happens with the Fed's movement of rates, and that's because that follows the prime. So like you said, there's student loan, and there's credit card debt, and there's auto loans. Those generally do move very immediately with the Fed actions on the cost of funds, or the the prime rate. So what really derives mortgage rates has to do with, are investors going to get an interest rate on their yields? And typically, bonds are considered a safe haven. They're considered a place for investors to put their money. And I'm talking about in aggregate. We're talking about hundreds of millions of dollars, not just a couple million here and there. Mm-hmm. But we're talking about massive movements of money in and out of bonds. So if the demand for bonds changes, that affects the interest rate. Now, of course, we're seeing a lot of volatility in all markets, from oil to tech to real estate. But, the actual impact that mortgage rates have on people's day-to-day life is different, because it doesn't move that much. Just in the past 2 years, we've seen this range of interest rate movement, not really much more than about 1%. In fact, if you look at where we are today versus where we were a year ago, it's almost the same average interest rate. So despite headline catchers and, those clickbait ads you see all over the place, or unfortunately people get a lot of misleading pieces in the mail, mortgage interest rates have been fairly stable.
Okay. Yeah, I mean, which everyone's going, no, they haven't. But no, and they have, but they have, like, I like how you look at it from the big picture and from what you see on the day to day. Yes, they are. They're definitely, we had a drastic, increase from back, when they, I think made you agree, made a big mistake in lowering them that low during COVID. And now it's come back to bite us, because nobody wants to sell their house and get rid of those rates. So we do see a drastic swing in that. But I guess, when you look at the big picture, like you said, from 6% to 6.5%, isn't that big of a swing, but it does affect somebody when they are really right on the edge of what they can qualify, doesn't it? I know when you do it, you break it down to 30-year, and that, excuse me, and it's, maybe another, $30 to $50 a month or something, but how does that affect somebody if they're qualified, maybe up to, they can buy a house up to $800,000, and then suddenly the rates went up now like 0.5%. Doesn't that knock some people off, or are there some strategies that they can kind of keep still in that area where they can afford it still?
I think, affordability is a big part of the conversation I have with all my clients. And, excuse me, and affordability is, I don't tell people what they can qualify first. I ask what they want to qualify for.
Right.
And so affordability is also very much of a subjective feeling of, am I going to be comfortable making this payment? And so I'll ask my clients when I start talking about a pre-approval, how much are you paying for rent right now, or how much is your mortgage right now? And they'll tell me this, or they'll tell me, it's based on a 3 or 4% rate from 2021 or such. And I'll say, look, let's talk about what the monthly affordability is. Let's talk about the taxes and the insurance. A lot of people don't realize how much insurance has an impact on their payment,
right?
Or whether or not they're going to have mortgage insurance. So there's so much more that goes into the conversation than just what is the actual amortized payment for principal and interest on my 30-year mortgage. And so what I really try to do with folks is not put them in a position where $200 is going to make or break them.
Yeah.
Because we've already failed our clients. If they were at their 49.9% debt to income ratio at a 50% limit, and now all of a sudden they're at 51%, they really were already going to be struggling.
Yeah.
So I think those were the mistakes that a lot of my peers back in 2003, 4, 5, and 6 made in putting people into loans that were so close to their budget. Today it's more about what are you comfortable with? What's the rest of your debt look like? Do you have another $20,000, $30,000 in the bank just in case something happens? Illness, death in the family, unfortunate layoffs, and things that you can't control. So to me, that's why I started the conversation today with you ladies is what can you afford and what can you be comfortable with? And buy based on what you can afford now and don't try to chase the market. So many people will say to me, oh, I think I should wait until rates come down into the 5s. Well, when you look at the black and white numbers, 0.5% on an interest rate on a $600,000 or $700,000, it's a few $100 a month. Is that really going to drive your decision? Or if you're a first-time home buyer putting down, say, 3% of the purchase price or 5% of the purchase price, and that home that you bought for $700,000 really only cost you out of pocket maybe about, I don't know, $35,000, $40,000, $50,000 with closing costs, and then every year it's going to go up on an average scale of 3 to 5%. So your return on investment is really about market appreciation, and it's not just about what it cost you. It's also about what the opportunity to own real estate did for you.
Yeah, no, and thank you for all of that, because you're so on the nose with that, because it does, and we tell people too, that are waiting for the rates to come down. Well, guess what happens when the rates come down? There come all the buyers. Now we've got competing offers. Now you're offering more because you get caught up in a bidding war, or you go, forget it, I don't want to get caught up in a bidding war, and then you leave the market, altogether, because everything suddenly got away from you. So when you look at it that way, and I really appreciate that you have those conversations with your client, and looking at it, what can you afford now, and then looking kind of to the future, and what's going to change in your life, what could change, and are you ready for that, and all of those things. So, and then what could change in the market, and if the rates do come down. I know that you also have those conversations with people, like when is a good time to refinance, and does it make sense? Are you going to recapture, the cost of refinancing and all of that, right?
I do. I'm sure you know this specifically, but for your listeners, people think of a 30-year mortgage as sort of like a ball and chain. I'm just stuck with this mortgage forever. And in fact, especially on owner-occupied mortgages, prepayment penalties are illegal. So you can move into another mortgage product when rates come down with the marketplace. And typically, statistically, I guess is probably a better way of saying it, that's every 5-6 years or so, people tend to refinance or sell. So it's not a permanent situation. And very rarely in my entire career of, as I mentioned, 23 years, have I seen anyone who actually successfully paid off a 30-year mortgage and then had no balance. Now, there are, of course, people that have approximately 35% of all homeowners have no mortgage. But once you're into the mortgage marketplace and you're using it to buy your first and second and third house, you typically will get out of that mortgage within, like I said, 5 or 6 years.
Right, either by selling or refinancing, right? Because we see people typically moving also, 7 to 10 years or something is the average. So, I'm one of those oddballs that I haven't paid off my mortgage, but I have, because I've refinanced a few times and stretched it out further and further, but that works for me. But I've been in my home for almost close to 30 years now, but and I have a ton of equity because I sat through a lot of ups and downs in the market and just kind of kept paying my mortgage, and my mortgage right now is less than any rent would be. So that's
also
good.
With inflation constantly in the news, people also have to understand that real estate is considered by most economists and investors to be the best hedge or security blanket against inflation. Because what else goes up when consumer price index moves? Home prices tend to go up. Mm-hmm. So we've been in a bit of a weird flat market, as you know.
Yeah.
But inflation numbers also are always on people's mind. And I don't know too many people that bought a house in the last 5 to 10 years that are upset about that investment choice.
Yeah, I don't either. Yeah, you're right. And then people go, now looking, gosh, I wish we would have, bought, 10 years ago, even 6 years ago before COVID, when we all thought the world was going to collapse and instead the real estate at least just kind of took off. So I guess maybe here, that's a good segue into my other question. And I touched on a little bit, but those people that are sitting in that really low COVID-induced low mortgage rates, that really, really plugged up our movement in our market, because there's people, that gone, why would I refinance, or not refinance, but why would I move and now get a 6.5% mortgage instead of, the 3% or under 3% that I have? But I think that goes back to your thing about, well, what can you afford? And also what we always tell people is, how important is it? What do you need to move for? There is always at some point, and I think we're feeling that point. And I'm sorry, I'm going on and on. I'll finish my question in a second. But at some point, I think people are now saying, okay, it's been long enough. The rates are not coming back down to 3%. We have to move. The house is too small. It's too big. We need to get closer to family. And they're realizing that it makes more sense. And then looking at it in the way you framed it is, does it make sense, and how can we make it make sense? So how are you having those conversations with your clients that are making that move?
Yeah, what I'm telling folks again is it comes down to lifestyle and affordability. If you are if someone I'm talking to is an empty nester, right? Their children have moved out. Mm-hmm. It's now just two folks that raised a family in a 4 or 5 bedroom house. In a sort of a suburban development, and it's bigger than you need, you become what's called a move down buyer, right? So you're sitting on all this equity, and you're not really that happy about your house anymore. Mm-hmm. I say you did great for 5 years and 6 years, and you got yourself an awesome mortgage for that time period. But at some point, why don't you take that equity out of your house and go buy something you're really happy about? Yeah. And the opposite is true for first-time home buyers. I know lots of folks that I've helped, get people at 2.5%, 3% interest rate back in 2020 or 2021, and they bought a 2-bedroom or a 3-bedroom house, and now they've got a couple more kids, they've got a couple dogs. Their lifestyle has grown, and their house hasn't.
Yeah.
Or the family has grown, and their lifestyles have changed. And they're sitting there defending this 2.5%, 3% rate. And I tell them, folks, you did great, and I bet your home prices have gone up since you bought it. You successfully paid your mortgage down for 5 or 6 years. It's okay. Give yourself permission to get into a house that's important to you, and don't just sit there on it, because there's so many other factors to home ownership besides your interest rate.
Yeah.
How big is your yard? Is your house too big? Is it too small? Are you in a neighborhood that has an HOA? Are you in a planned unit development that has an HOA that's tripled on you since the last 6 years
right,
because of insurance, right? So there's so many other factors that go into the decision making about financing a home.
Yeah, no, and I think that's great, and we do need to have those conversations with people.
I think that's a really good point
to really change that mindset, right? Yeah.
Definitely.
So, George, we're going to take a quick break. When we come back, let's talk about. I know there's a lot going on in the world right now. What do you see affecting what's happening in the market, in the mortgage, side of the market, because of the war in Iran, the price of gas, all of those things? Are you seeing an effect of that? So we'll ask you that again when we come back. Let's take a quick break. I'm Allison Norman.
I'm Stephanie Norman.
With the Norman Home Team. You're listening to the Real Estate Hour. We have George Adair on the line. Stay tuned. We'll be right back. Good morning.
Good morning.
We are back, and we're having a very good conversation with George Adair, who's a mortgage loan advisor, branch manager at Cross Country Mortgage. Been around forever, and I've actually personally worked with George on a home loan myself, and I know he and his team do a great job and highly recommend you reach out if you are thinking at all about anything, refinancing, buying a house, all of the things, or selling and buying, and you need to strategize about how to do that as well. George can help. So welcome back, George.
Thank you so much for having me today.
Absolutely. And so let's continue. I kind of threw out a question before we went to break, but the big elephant in the room, I guess, is so typically when we see a war start or we see unrest in the Middle East or anywhere in the world, we go kind of, we'll probably see the rates come down now, because I think, and you know better than I just know because what I've seen and heard is that rates typically come down a little bit when there's unrest in the world. That didn't happen this time around. They actually went up a little bit, and we already had the conversation about the little bit it went up really isn't a huge deal, but it is just interesting to see it not react the way we typically would expect. So what do you think is going on? What are you seeing on your end?
That's I'm watching
a loaded
I'm watching
question.
Yeah. Well, all politics aside, let's just look at the numbers. The impact of what's happening in the Middle East is actually less dramatic than I thought it would be on mortgage rates and even the stock market. We have to be careful about falling into the clickbait trap of organizations on TV and now podcasts and everything that tell us the dramatic swing of mortgage rates. When you look at a chart, it'll show you that it hasn't been very dramatic in almost all the indexes, except for oil. There's no question oil has been impacted. And there's no question. And that is the reason why this time there hasn't been the same safe haven of investor money going into bonds. Typically, when there's a war, investors start to sort of pucker up and get nervous, and they put their money into safer places. I think with AI tech companies, I think with what's happened with oil, and I think with just sort of a stagnant, weird real estate market anyways for the last couple of years, it's just performed differently. I remember when, as you know, I had my own show for almost 11 years on KSRO.
You did.
And I would actually reference, if we ever have a war with Iran in the Middle East, all bets are off.
Yeah.
And I was right then, and you just can't predict what's going to happen.
Yeah.
And that's why I say buy when you can afford, sell when it makes sense.
Yeah.
Nobody none of our listeners are going to have any sort of influence politically or financially on the marketplace. All we can control is our own personal budgets. Mm-hmm. And I can tell you that we've seen the worst of the worst for my entire career of 23 years. Wars happen, and don't make big financial decisions based on what's happening to the macroeconomics of the world. Make them based on your own personal budget and your own personal needs.
Yeah, that right there is everything. So, and I think really, you're right again. You're right again, right as usual, George. And it is bringing it back. It's that do what makes sense for you. And same with real estate prices. We have those conversations too. The home values. That we need to stop trying to time the market. People that were timing the market in 2019 and thought they'd wait, and because they thought the prices would come down because of what was happening politically. Well, COVID happened, and so stop trying to time the market and do what makes sense for you now. And have those conversations with us or with another realtor and trust, and have those conversations with your lender. We're your team, and we're here to kind of help you figure out what works for you, not looking at the big picture. So thanks for that, George. Stephanie, you had a question about first-time buyers.
Yes. I know there's a lot of first-time home buyers out there that think they could never afford to buy a home. Even though they probably can, but they think that it's impossible for them.
They just shut down and go, it's never going to happen. Yeah, all right, I'll be ready in 5 years.
Or need to pay all my bills off, and then I'll be able to afford to buy a home. So what kind of conversation do you usually have with first-time home buyers who are like, oh, no, I'll never be able to afford a home? Do you have those kind of conversations?
Yeah, Stephanie, it's so important what you're talking about. It's called barriers to entry, and buying real estate is scary. People think it's risky. They watch a lot of today's first-time home buyers with children. when the 2007, 8, 9 housing crisis happened, and they watched their neighbors and their aunts and uncles and even their parents lose. 25% of all houses went into some sort of mortgage default back then, and so it's definitely intimidating to think about the liability side of, oh my gosh, I am going to buy a house and be stuck for the rest of my life paying the bank, paying the man.
Yeah.
I tell people again, affordability. Let's talk about what you think you can afford and see if that aligns. Here's a really easy factor, and I want people to really tune into this if you're tired of hearing me talk, but this is the one thing I want you, this little nugget is so important.
Okay.
For every $100,000 you borrow with taxes, insurance, and the mortgage, it's going to be about $650 to $700 a month. So if you borrow approximately $500,000 to buy a home, that's about $3,500 a month. It's not that far out of reach. And a lot of people are coming together and buying houses. And,
together. Yeah, you cut out for a second, but yeah. Yes, people are, and we've talked about that too, is what does that look like if you buy it with your friend? Or we're seeing the, family compounds, or people trying to really kind of buy the house with the ADU so they can split the cost.
I remember at one point it was cheaper to buy a house and pay the mortgage than to rent a home. But that's not the case right now, is it?
Well, I think it depends on the size of the home and the situation on the rental, of course.
Yeah.
But you're right. I mean, dollar for dollar, you're going to get a lot more value by owning your house. And that's where it starts. As we wind down, I know we're hitting our
we're going to wrap it up, and I want to make sure people know how to get a hold of you.
I just want people to know that, Allison, you do a great job. Stephanie, you do a great job of educating people to make those good decisions. And I've worked with you for a long time, and I know that you're good at it. And if folks want to find out more about what I can do to help them in crunching numbers, great place to start is at my website, which is my name, George Adair, ADAIR.com.
Okay, George, A-D-A-I-R. No E at the end. I always try and put an E, but there's not an E at the end of Adair.
No E at the end. GeorgeAdair.com, and I'd be happy to walk you all through what it takes to buy a home today or in a year or 2 years from now.
Oh, perfect. George, thank you so much. You're always such a great resource, and I know that you really have actually helped a lot of our clients and, like I said, me personally, but I appreciate that you take the time to help people understand the best strategy for them, and you do not get them stuck in a situation that they're going to be in trouble down the line, and I appreciate that about you. And then, I think, a lot of lenders are really good at sitting down and talking to people about strategy and maybe, how to get your credit up or how to pay things down so that you can afford what you can. So absolutely reach out to a lender. George is a great option. Again, GeorgeAdair.com. That's all we have time for. Thanks again, George. Go out and have a great day.
Yes, thank you for calling in and answering all the questions.
So if anybody has, thanks, George. If anybody has any further questions for us, you can always reach us, Norman Home Team, or just nodumbquestion@gmail.com is the easiest one to remember. But look on our Facebook pages. We have the Real Estate Hour with Allison and Stephanie Norman. We have the Norman Home Team with Allison and Stephanie Norman. And go to our YouTube, Sonoma County Real Estate Hour on YouTube, and you can see the recording of this show, or go to ksro.com. But we are out of time. Talk to you soon. We'll talk next week about our new listings coming on this week. Take care. Have a great day.
You've been listening to the Real Estate Hour, heard every Sunday morning right here on KSRO for over 35 years. Hosted by Allison Norman and Stephanie Norman, local realtors with local real estate experience. A mother-daughter real estate team with Keller Williams Realty Wine Country. Call or text 707-799-3617. More next week right here on KSRO.